Okay, traders, welcome back to the channel. Here we have the regular Forex outlooks for both Euro USD and GBP USD. So again, how am I looking at the Euro dollar currently? So this is the chart in front of you. Again, this is the daily time frame, which you can see from the daily POIs. So from here, we all know the story by now. How do I analyze the charts and how should everyone be analyzing the charts? Well, we have four things to look at. We have our market structure, we have our dealing range, we have our premium and discount arrays or our PD arrays, and we also have our inefficiencies or our fair value gaps. So these are the four pillars that I use to determine the market bias going into the week or even the day ahead on every single market and asset class. So if we begin here by looking at the market structure, again, if we just scroll to the left, what we have over here in terms of market structures, we had bullish structure here on the daily time frame, switching to bearish. So we had the switch of structure over here from bullish down to bearish, right? So this break of structure over here, this one over here, switched our overall bias from bullish down to bearish. And now that we have bearish market structure, the next thing that a lot of traders don't really consider, but it's incredibly important to understand, is the dealing range. Now, what do we mean by the dealing range? The dealing range is essentially the most recent swing high to the most recent swing low. And it's essentially the parent price range, right? The parent structural range. Very important to understand, right? We have a swing high up here and we have a swing low. So anything in between is all internal structure. So all of this that we see here, this is all internal structure. The main structural points we need to be understanding is this structural high and this structural low. This is the internal structure over here, but this is the external structure over here. So this is the dealing range. Now the premium and discount arrays from here are very important. Once you have the dealing range established, from here we're essentially projecting the Fibonacci from the swing high down to the swing low, just like this. Swing high down to the swing low. So once we have our dealing range, the dealing range gives rise to what we call the equilibrium, which is the 50% level. Now, intuitively, this is essentially the midpoint between the swing high and the swing low. So now that we have our premium and discount arrays established, you can already see I've got the POIs marked on. Now, the POIs are derived directly from where there are inefficiencies. So there's a fair value gap over here, there's a fair value gap over here, and there's a fair value gap over here. So we have three fair value gaps. And so when we have a point of interest, essentially what we're looking for is we're looking for three things to qualify a point of interest. We're looking for a break of structure, we're looking for a fair value gap, and we're looking for price to be in the premium if it's a bearish POI, and we're looking for price to be in the discount if it's a bullish POI. And so from here, now that we've established this, what we now need to understand is where price is going to go relative to the four pillars. So understand over here, if we start to analyze internal market structure, what we have is we've seen a few breaks of structure to the downside, right? Internal breaks, right? We've had a break of structure over here. We've then seen a break of structure over here. And now from here, we need to understand based off the internal structure, this low over here becomes of significance to us, right? So if we label this over here, we have a low over here. Now, this is essentially a weak low. This is a weak low in the markets. Now, why is this a weak low and why is this an area of interest to us? Well, there's a few reasons. Well, the first reason is that if we analyze price, right? Price from here pushed up, bearing in mind the internal high is over here. Have we broken this internal high? Has this push up broken this internal high? What does this low actually produce? Well, the short answer and the correct answer is nothing. And so because of that, this weak low becomes the target, right? So as price now heads lower and lower, the overall target is bearish. And the reason why the daily narrative is bearish is for two reasons. Number one, we have a weak low. But number two, like I said previously, we have an inefficiency over here. We have a fair value gap over here in blue. Now, this fair value gap gives rise to a discounted POI, which is also the target. So if we now zoom into price again, I expect price to eventually come down to this level over here. So this POI is marked at 1.058. So let's mark that out. 1.05834 is the official price. So I expect lower prices down to this region, right? And the reason why is simply because, yes, it's in a discount. So if I label the reasons, The three reasons that I expect lower prices. I expect price to get down to a deep discount. We're already in discount, but a deep discount. Keying off that is essentially a fair value gap to target, and we have a weak low. So these are the three reasons why I expect lower prices in this particular market. Now, if we head down to the 4-hour time frame, the 4-hour time frame again paints somewhat of a similar picture, where overall we have a bearish structure as you'd expect. So that the internal daily breaks represent 4-hour breaks of structure. So again, our dealing range, this swing high down to this swing low. So this is the current dealing range we're dealing in. Notice how we've had a reaction of this 4-hour PY firmly in the premium above the 50% level. And now from here, where's the overall target? Well, we have a 4-hour PY just beneath us. So I expect price to essentially, yes, we could see a pullback into this fair value gap over here. We have a bearish fair value gap over here. But ultimately, again, I do believe the bears are going to win. Maybe not this week, but we have NFP this week. NFP could be the driving factor towards seeing lower prices. So this is my overall narrative on the euro dollar. We're generally bearish, but please be aware we could see a pullback before ultimately heading lower. Now, the GBP USD chart paints somewhat of a similar picture where I do expect bearish pricing. So again, what we have is we have a bearish stealing range. To quickly go over the basics, we have a bearish dealing range over here. So this swing high down to this swing low. This is our dealing range. And now from here, we understand we're just above the equilibrium. So we're pretty much neutral when it comes to pricing. We're just above the equilibrium. So we are technically in premium. So what do I expect now from price? Well, I expect price now to target this POI. And yes, we could see a bullish reaction, but ultimately the way that I see prices, we could get down to this POI before ultimately heading higher. So understand we're in a premium. So this is the correct area to look for sales down to one of these POIs, either this POI, but ultimately this is the higher probability discounted POI. Again, the 4-hour time frame paints a similar picture, and this is where we need to understand liquidity, right? So again, dealing range is bearish, right? Notice how we have a swing high and we have a swing low. So our dealing range is bearish. And now what do we see when we look at the most recent price action that's in front of us? Well, we had equal highs over here that have been swept by this aggressive move upwards. We had a very large pool of liquidity over here, a very large pool of liquidity. Again, it's been swept now due to the bearish activity. And now from here, where do I expect price to go? Well, it's quite simple. Ultimately, I expect price to get down to here. But again, the week could start off by giving us a bullish manipulation before ultimately heading lower. So again, overall, the narrative is for lower prices because we have discounted POIs to target. So this is how we use the 4 pillars to determine an overall market direction. So to quickly go over that again, right, I suggest people get this in their notes because this is very important. We want to look at the market structure. Are we bullish or bearish, right? Very simple, very simple. After that, we want to understand our dealing range. What is the dealing range, right? Where is the most recent high and low? Are we in premium or are we in discount? The PD arrays, right? And last but not least, where are the inefficiencies? Because that's where we're targeting. Number 3 and 4 are very important when it comes to determining an overall bias and understanding where to target, right? We're targeting a discounted fair value gap, right? In line with the bearish structure and the bearish overall dealing range from this swing high down to this swing low.